Hi, this is Acme with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 18th of May. Starting off with our exploration, where there's been a good update today, and the shares just trying to get, well, they're actually already at the best levels they've ever been. End of day close through 16 pence, could be the momentum trigger to take the shares up to a long-awaited move up to 24 pence at the top of that broadening triangle from back in December. Time frame on 24 pence, maybe as soon as the end of next month. Ideally, there's no end-of-day close or any price action back below the support line there from December, around 13.5 pence level with the 50-day moving average. Onto a stock which has been hit like many others in the recent past, but maybe there's a sign of recovery here for Blackbird. Here we see a sort of sideways consolidation that we've had since March. A brief bear trap in April below the March low, and just sort of gives the impression of bumping along the bottom. Here we've got an uptrend line in the RSI window, so that's actually a bullish divergence line given the lower lows that we had in April. And in terms of the upside here, perhaps we're looking up towards the former support on the way down around 21 pence by the end of next month. Obviously, we'd like to see an end-of-day close above the 50-day moving average and that March resistance line around 16.6 pence. Just to confirm that we are turning around. The other point to note is that we had a gap down and closed that gap at the beginning of this week, so gap close buy signal can be useful, especially when it is near the lows of the range. Moving along to a stock which was thankfully only suspended for a very short time. Here we've got Eurasia, one that a company that divides opinion, but so far, at least today, we've had a bit of a bear trap effect there from below the old 7 pence zone support of May, and end of day close above 7 pence should at least stabilize the situation. Ideally, we're still waiting for the end of day close through the 50-day moving average. That's currently at 9 pence. If we can get that, then one can probably say that the Eurasia is back in business in terms of recovery, and that would then point to a 13-14 pence target. But that, I suppose, is the optimistic way of looking at things. We don't want to see any break of today's initial low at 6.25. Got an uptrend line in the RSI window as well. Not that strong, but it could be enough to get us over that 50-day moving average. Moving along to another stock which I don't normally look at very much, but here it is today. We was concerned about placings and other stuff, but here we've got Inspirit, which has clearly broken the November resistance line and the 50-day moving average. That's now rising. We've had a sideways shuffle above that, which is a good sign. And if we get an end-of-day close above 0.04, which is the 200-day line, we could be looking at 0.07, placings permitting, over the next month or so. So shaping up, at least on the technical basis, quite well. The final point positive here, and that the reason that we're looking for a relatively large rebound, is the bullish divergence. So we had the much lower lows for March, but a higher RSI trace, and that may be the thing that gets this stock moving. Only back below the 50-day line, currently just below 0.03 pence, really delaying or hinting that the recovery here is just a flash in the pan. On to MetalNRG, which I believe had an announcement today. Here we've got a situation where we've had this broadening triangle. We've also got bullish divergence as well, so the lower April and May lows, but higher RSI trace. So that does suggest we're in a positive kind of framework. Gapped up today and looking at the top of that triangle at 0.24 over the next couple of weeks, if we're lucky, and also if we remain above the 0.16 pence level. On to Powerhouse Energy, which seems to have celebrated the departure of the chairman there. Here we bounced off a 2-year support line at 1.7 pence, which was very nice, and we're also very oversold at that point, so that particular charting or technical analysis worked. Now it's interesting that we're nearly approaching the initial target that we had around 2.66, i.e. the 50-day moving average. But it may be that the way things are going, we actually go a bit higher than that. April resistance around 3 pence, and that could be in the frame if we can get a decent end-of-day close above the 50-day moving average either today or tomorrow. Onto a stock which reminds me a bit of the way that Powerhouse was a few days ago, i.e. Pires is now in deeply oversold territory, RSI around 17 or 18 out of 100. You can see looking back that most times that the shares went into the oversold area, there was a rally soon after, maybe a week or so after. We had that in July, we had that in December, and we even had that in March as well. So we're looking for history to repeat itself on the oversold condition rather, and for the shares then to rally back towards maybe 5.5, 6p, i.e. the area of the 50-day moving average. On to Sound Energy next, and you can see there's been decent progress within a rising trend channel. That's been in place since August last year. We're looking for 3.5 pence, maybe a bit more than that actually, maybe up to 3.75, depending on exactly where you draw the channel. But that decent price action all above the 50-day moving average, that sort of shuffle above it, and the way that 50 and 200-day lines are rising gives us confidence that we could head up to 4p by the end of next month, or maybe a little bit later than that. And the whole rally here started off with bullish divergence, so that bear trap in March gave us the divergence that has led to the rally. Only back below the 50-day line now, around 2.1 pence, really delaying the upside scenario. Another stock I don't normally look at, but here it is today. We've got 10 Lifestyle with a degree of bullish divergence here. It's obviously not the most liquid of situations, and there was a bit of the horror of the gap down that we had in March. But we could see a rally back towards the old March peak and the old April resistance around 72 to 74 pence, while we hold existing lows around the 56 pence area. So let's see if the bullish divergence there works. Looks pretty strong on the bullish divergence front. Finishing off with the stock which I know is a favorite for quite a few people. Here we've had a bit of a bear trap for Tomco, and 2-day bear trap, 2 or 3-day bear trap there below the January support. Reasonable rebound now, and all we're really waiting for is to see a break of that resistance line there from September, around 0.55. If we can get that, then it could be back to the top of the range, 0.8 or 0.85 over the next 1 to 2 months. But the bullish divergence there and the bear trap give Tomco a reasonable look at the moment. That's it from me today. More updates tomorrow.